In this video, we're going to talk about Nndm. If you're considering buying Nndm in your portfolio, then please keep watching this video until the end, because it covers many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $8.15 and closed at $8.30. The lowest point at which it fell to was $7.78, and the highest point it rose to was $8.42. Compared to the current price action, its 52-week low was $1.31, and the 52-week high was $17.89. The current trading volume of Nndm is 15.5 million shares, compared to the average volume of 19.3 million shares. The trading volume of Nndm tells us that the stock is still recovering, and I believe that investors are increasing their appetite to put their trust in the company once again. But we have to wait for the trading volume to get back to where it was, because the recovery is still fragile at the current moment. Now, let's take a look at the enterprise value of the company, which represents how much the company's assets are worth once the debt is removed. The total enterprise value of Nndm increased very drastically from a year ago to nowadays, from $54 million to $1.42 billion as we speak. I would say that this progression confirms that the company has changed its dimension from where the company was about a year ago. Another outside signal to observe is the total number of shares outstanding. Generally speaking, if the number of shares keeps increasing, then it suggests that a company is selling its equity to pay the bills. The number of common shares Nndm has increased by a large chunk, but lower than the increase of EV, from 46 million shares in Q2 of 2020 to 256 million shares in the present day. I believe that going forward, Nndm may dilute some more shares to balance its books, and that it's going to be a constant pressure on the stock price, since the effect is mechanical. With that being said, if the stock market perceives positively this company, then all this would be a negligible effect. The Nndm stock has now confirmed that it is recovering from the downward trend that the stock has been going through since the early 2021. The current price point is at an interesting level because the previous high was very close to where the stock is now. This means that unless the stock crumbles again in the coming days, we can now be sure that the stock is going to resume its bullish run after a long period of correction. I would recommend to start increasing the exposure in Nndm and hold it for at least the next 6 months. From the price action patterns, I believe that the stock now has enough steam to go higher. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting more money into this innovative and growth stock sector in general. We're now over the stock craze of 2020, and most investors decided to pull back from the entire scene of disruptive and innovative stocks, covering biotech, EV, and anything requiring keynote presentations. Going forward, the focus of the market will get back to the financial stability, the longevity of the company, and whether the company has solid financial outlooks. In other words, the blue chips has once again taken over startups as the go-to investments for money manager. In the current circumstances, the recommended approach is to be careful when buying shares. On one hand, stocks may be able to climb back on their own when operations begin to pick up. On the other, the stock may simply increase because it fell too low. This means that the current market conditions require us to tread the water carefully regarding when and how many shares we want to buy. Many of them became overpriced over the past 12 months, and we may need to wait for another few weeks or months before the timing is right to increase the exposure. With that being said, it is clear now that many stocks